Hello everyone, welcome to your weekly on-chain review. This is your host Kai and today is 9th of October 2022. Let's go ahead and look at some important on-chain data. First we'll look at realized cap versus market cap. You can go through the details of the metrics on the side. In some of the charts we have put it here, and this chart signifies a buying opportunity whenever the market cap goes below the realized cap. This means that the aggregate market is having unrealized loss, and this comes very rarely. You see, in this phase we spent 1 year when this realized cap was below the market cap. Here we spent around 120 days, here also around the same, around 120-30 days. Right now we have spent about 100 days here when the realized cap is below the market cap, but we see that in a proper bear market we have taken 330 days in this one. So it is significant that we are in a very important value zone. If we look at the long term, according to this metric, this happens rarely and it's an opportunity for long-term investors. Next we have is the PUELL multiple. It is a ratio between the current market price and its 200-day moving average. You can see how we are in a value zone. We have been here since a while now. With the move, the couple of rallies which we saw to 20,200 and also above that before, we saw that the 200-day moving average is actually coming down and the price was going up. So this ratio has spiked up a little bit, but where it went has been historically the bottom signal. Whenever it has reached this level below 0.1, it's a high value zone. So if we can discard this, and if you see the last bottoms, first the latest one was here, then Corona drop was here, 2018 was here. So this area, we're below that right now, and even in 2015-16 the bear market bottom was here. So this signifies an area of value right now. Next we have is the whale accumulation heat map, and whenever you see the darker colors, red colors, it means that whales are accumulating, and whenever it's a colder period, this period, it means the whales are decreasing in the number, decreasing their reserves which are on chain and selling. So this is accumulation, red area. We have seen first signs of buyers below, when the price was below 19k. We saw some buys from the whales here. We saw this chart last time with the bicycle bottom and how we have made a crossover, and we are looking for the bottom to be placed somewhere here or on the next level, which we have also discussed in our previous video, which is the delta price and also the balanced price, which is at 17,600. This was the formation, we have gone through it last time. So this is the difficulty regression model. This is also the balanced price, and we have discussed what it means. This is a shorter format of the video and we will be quick in going through all these metrics. And this is at 18k right now. We had a spike to it at 17,600 and it formed as a support level. Next we have this chart from Glassnode. They have spoken about how these levels are where minus support can be expected. If not, then these are the zones of capitulation of miners, and this is at the 12,000 zone for, and the model 1.41 is at 16,000, 17,000. So model 2 is at 10,000. So these are the prices where various miners might capitulate. Next we have is the short-term holders SOPR, and what we have seen from previous times, we are looking at it. Whenever this metric approaches 1, we are seeing a drop, and this red line, you can see how we are unable to evolve above it, and whenever short-term holders are reaching break-even or getting a little bit in profit, they are selling. So what we have seen is this is a characteristic of the bear market. It had taken 400 days for it to finally break out of this resistance and evolve above 1 and give a small rally. We have done about 300 days since the metric went below 1, and this has stayed in this zone. It's been 321 days. So you can see that this can be shorter periods also when you have small bear cycles within the big bull cycle. But if you have a proper bear market, you can expect it to be here for 400 days even. So we have had spent reasonable amount of time now below 1, where it means the short-term holders are realizing losses. So you see this is 2016-15. Here we spent 121 days. Here also we spent 400 days below 1. So right now we have spent 300 days. Next we have is the adjusted SOPR. The same story. It is also unable to break above 1. We have spent around 300 days. In the previous bear markets we have spent around 400 days under 1 for adjusted SOPR. So you see that even when we spend these 400 days below, the bottoms are put in. Here there was a double bottom in 2016, and there was sideways only after that, and the second bottom came. And after that, when it broke on 17th October 2015, the first break, that was the start of the bull market. So we are watching this and we want a proper break from this zone for the SOPR. Next we have is the long-term holders SOPR. So whenever it is below 1, it means long-term holders are realizing losses. And here we have seen that we are in the zone since 132-33 days. Previously in the bear market of 2018, it was 330 days. In the bear market of 2015, it was 400 days. So we have about an year left according to this metric. Even though we can put in a bottom at the early part when the initial losses are realized by long-term holders, but then we have a sideways for a year according to this metric, which is left. Next we have is the MVRV. This is a description, you can go through it. So now you can see how MVRV is in the value zone since quite a while. These are rare opportunities, though it may take 1 year, 400 days, and may stay here for 200, 300 or 400 days. Here it's spent around 200 days, here it spent very negligible amount of time. So you see that these are very rare opportunities in the market, and we have seen in a 12-year long market we have only spent around 500 or 400 days below it. So this is an area of value, and this chart has been shared earlier. This was the 2020 bottom, 2018 bottom, and 2011 bottom. So there is room to go, but this is an area of value for long-term accumulation. For short-term traders, the market is very gruesome right now. The sideways chop are like this. That is the NUPL, that is net unrealized profit and loss, and you can see that we are in the value zone, and last time also we spoke about it. We have to see whether we fall back into the capitulation zone. This green area is the capitulation zone where we usually buy, and for long-term buyers this is the place to get in. So if it crosses above this line, this is hope, and this is euphoria. Right now we are in capitulation, and you can see how low it went in 2015. So we have around, so now the network is at a loss of like 53% or 52% of the network in Bitcoin is at a loss. In 2018 we saw 48% network in loss, 46 to 48, and 2016 and 2015 we saw 40% of the network in loss. So 5 or 10% down, even if it happens, it won't be a surprising thing. And we have 15k as a area of delta cap, and we have long-term holders cost basis around 13k, and we have balanced price at 17k. So even if we go 10% down, these are the levels to watch if this structure here breaks. Otherwise this presently where we are at below 19k is a value zone, high value zone according to all these metrics. So you can see this is NUPL, this is long-term holders NUPL, profit and loss. This is average. So you can see how we are in this value zone right now. We are actually at the same level where the corona bottom was formed. This is relative unrealized profit, and you can see whenever this metric is at the upper band, that signifies the tops, and whenever this metric is at the lower bands, it signifies the formation of bottom. So we are in this green buy zone right now. So this is the place to accumulate according to this metric, relative unrealized profits. Next we have is the dormancy. The dormancy is even lower than the previous bear market. You can see this green line. This was the corona level, this is the 18 level. So we are below that level, and we are even below the level of 2015. So this chart is showing us that this is a zone of extreme value, but we have been in this zone for quite a bit. But yeah, this has proven to be a zone of value historically. We have been watching funding and we have seen that we are unable to cross this resistance here. We are in the neutral territory. As soon as we get positive, we see a drop in the Bitcoin price. Whenever we cross this red line and funding gets above neutral, we see dump. We need to see sustained funding above in positive, or a heavy capitulation, either of the two, to make it actionable. We have seen open interest rise in the past 3-4 days. It broke out of this downward channel, and it meant that a lot of futures trading was happening, and this was coupled with leverage. This was leverage from the last time. This is the leverage. So leverage has increased significantly. It is at its all-time high. You can see how it has broken out of the channel, and it means that there can be high volatility, or it also reveals that this area, a lot of futures trading is happening, and high leverage is dangerous. Fear and greed index, we are at extreme fear right now, 24. This is the heat map. It might be here, but we cannot say till the trend starts. This is the description of the metric. New active addresses, we have seen some new active addresses in last couple of weeks, which has been increasing, and the price has been falling with the increasing number of active addresses. Increasing number of active addresses is a positive sign, but it is not that significant right now. The move is small. Monthly returns, we have gone through it. October has a hopium of being a better month. Usually it is the last part of October which becomes better. You see that in October also you have this shakeouts, and then we see a rally. So we could wait for the last part of October, of 20th October around, to see if this can manifest. This is a very important chart. We have already spoken about realized price, delta price, thermo price. The delta price right now it is at 15k around. So these are the levels if this structure breaks here. We have spent 140 days below realized price in previous bear markets. Right now it has been around 80 days. This is the fees, percentage of fees in total block reward. There is no significant change here. We need to see it turning green and evolving above this zone to say that a rally is starting. So that is, we are waiting for that still. So that is it for today, guys. Nothing much is happening. There is a 3-day bullish divergence on NAS 100 and S&P. So I am looking out for that. And the price action is such that you are better off thinking of long term and accumulating according to your portfolio. And if when the trend starts, then it'll be the time to look for day trades. So until then, just save your capital, protect your capital, and all the best for your trading. Thank you.